Good morning. I'm Andy Myers at Weiss Research, and this is your morning market update for Wednesday, August 10th. The bears are back on Wall Street, a day after the biggest rally since March of 2009. The markets have been extremely volatile since the resolution of the debt ceiling debate and Standard & Poor's downgrade of U.S. government debt last week. That volatility seems likely to continue today, amid rumors of a downgrade of French government debt and as the positive effect of yesterday's Federal Reserve announcement wears off. The central bank promised to hold interest rates at ultra-low levels at least through mid-2013, the first time they put a time frame on their duration. The move drew strong dissent, with 3 Fed governors saying they preferred the old language of holding rates low for, quote, an extended period of time. Stocks and other assets perceived as relatively risky got a big boost from the announcement yesterday. But despite those gains, all 3 major stock averages are still down nearly 10% over the past week. As investors continue to digest the Fed's statement today, they may shift their focus to the central bank's disappointing growth forecast. Policymakers said that downside risks to the economic outlook have increased, and they now expect a much slower pace of recovery than they did at their last meeting in June. The Fed also predicted that the unemployment rate will decline only gradually from its current level of 9.1%. Following the announcement, Treasuries are extending their rally. The yield on the benchmark 10-year note is falling to 2.18%, while the 2-year bond is holding steady near its lowest yield ever, below 0.2%. Despite the uncertain outlook for the U.S. economy, Treasuries are clearly still considered relatively safe investments. And that same safe haven status continues to boost gold. It's rising even further today, now above $1,770 an ounce, after closing at a record $1,743 yesterday. We're also seeing some strength in energy prices. Oil has been beaten down recently as investors worry that slowing economic growth will cut into global demand. In fact, crude has fallen more than 15% this month and closed at its lowest level since last September yesterday. But today it's back up above the $80 a barrel mark. The dollar usually moves inversely to commodity prices, but that's not the case today. The greenback is rising against most of its major rivals, particularly the Swiss franc. The Swiss National Bank said it will take additional measures to curb what it called the massive overvaluation of its currency, which is hurting Swiss exporters and the overall economy. Among the biggest stock winners during yesterday's rally were the financials, and they'll be back in focus today. Capital One Financial is buying the U.S. credit card business of HSBC Holdings for a premium of about $2.6 billion. The deal will make Capital One the 3rd largest issuer of private label credit cards, including cards for General Motors, Saks, and Best Buy, among others. Overall, the company will be assuming about $30 billion of HSBC's credit card loans. Shares of Capital One are gaining 3% on the news. Separately, Bank of America is selling part of its home loan portfolio to Fannie Mae for a reported price of more than $500 million. The biggest U.S. financial institution is trying to shed assets and reduce its exposure to mortgages. Bank of America's stock is down 43% this year amid concerns about mortgage-related losses and lawsuits. And today, it's falling 6%. Earnings season is tapering off, but we do have a couple more big names on the calendar today. Walt Disney reported an 11% increase in its fiscal 3rd quarter profit. The numbers were helped by strong revenues at the ESPN television network and the company's theme parks. However, the report seems to be disappointing investors. Disney shares are tumbling 13%. Meanwhile, Macy's profit and sales rose more than expected in the latest quarter, and the department store boosted its earnings forecast for the full year. Macy's is little changed in early trading. But one stock winner in the retail sector is Polo Ralph Lauren. It's jumping 9% after its net income came in much higher than estimates. The company also raised its 2011 revenue outlook. After today's closing bell, we'll get quarterly results from Cisco Systems and News Corp. That's the latest from Weiss Research. Have a great trading day.